a vast majority of Bitcoin is still held by individuals and still have a majority influence on the potential price action the upcoming days, weeks and months. And when that happens, we'll be able to see by looking at the on-chain data that a huge amount of capital is coming in to actually purchase Bitcoin at these lower prices. But so far in this cycle, we haven't really seen this smart money acting very smart. So any week that it's beneath that, you can dollar cost average in like you usually do. Any week where it's above that, you're just saving that capital until we're once again beneath it, and you can again scale in a little bit more aggressively once the market's had a little bit of a pullback. This is very typical, very normal for a Bitcoin bull market. If we look back to 2017, we were having retracements of 30, 40, 50% fairly regularly, and they were coming back and touching this short-term holder realized price level, almost a moving average of support and resistance throughout Bitcoin bull and bear cycles. Based on the previous cycles, based on the diminishing returns we're seeing, my base case is probably somewhere around $170,000 to $180,000. It's something I'm going to hold indefinitely, and anything I do in between now and death is just going to be to accumulate more of it.
Hi, Matt. Thank you so much for being on again.
Robin, thank you very much for having me back. It was great to be on last time. Had a lot of great feedback, and big fan of your channel as well. And especially after catching up quite recently in Vegas and getting to know you in person a little bit, I was excited to come back on.
Awesome. Yeah, really cool. It's so fun to meet people in real life and having that connection there, because I have a hard time sometimes recognizing people in person when I only saw them on screen. But it was really fun hanging out. I think we also saw each other then on the airport again, or only on the airport. I'm actually not sure. Like Vegas was like one blip for me.
Yeah, the thing is, when I saw you, you're maybe the easiest person I've ever known to spot, because I was walking through the airport and you see someone who's like 2 meters tall and it's like, oh, there's Robin, I'll go say hello.
Yeah, and I sometimes have even my name written on here. That makes it super easy. Yeah. But for the few people that haven't seen you or haven't seen your content, maybe give us some overview of who you are and especially why you're excited about Bitcoin.
Yeah, of course. My name's Matt, and I'm the lead analyst for Bitcoin Magazine Pro. So we're the data and analytics branch of Bitcoin Magazine, who do the publications, but also host all of the conferences, do Bitcoin for corporations and that type of thing. So we're just trying to simplify a lot of the data surrounding Bitcoin, specifically in terms of the on-chain, and now expanding into kind of macroeconomic data. I think a lot of people kind of get paralysis by analysis. They see that there's 1,000 different charts you can look at. And especially I was the same when I first got into Bitcoin and trying to learn everything. It can be pretty confusing. So we're just trying to provide the simplest charts that really you need to know, whether you're just a dollar cost averager, whether you're someone that's just interested in Bitcoin, or maybe you're a bit more of an active market participant. We're just trying to provide charts and data points that can help everyone.
Really, really cool. And I think last time we spoke was like earlier this year, if I had to guess. So like about half a year ago, or maybe a little bit longer than that. What has changed in the current environment, and how is like kind of the market doing, maybe also compared to like half a year ago, and how are things going?
The thing is to be honest, I think everyone watching this and everyone who's in Bitcoin is seeing these new all-time highs. And it's pretty bizarre, because they just feel like an inevitability now. I mean, in previous cycles, if you saw Bitcoin break into new all-time highs, there was just peak euphoria. Everyone was just over the moon. But now it's just like, right, we know that new all-time highs are coming. Everything is pointing in the right direction. So when we hit them, it just feels like an inevitability. I don't know, it doesn't quite have the same excitement. And I'm not sure if, again, that's maybe due to the price action we've seen this cycle. In previous cycles, if you look at the 2017 bull market, you have this big euphoric run up with big volatile swings. Whereas this cycle's been a little bit more, let's be honest, boring, where we've had this long period of choppy sideways consolidation, big explosive move to the upside or the downside, and then another few months of just sideways price action. So in terms of the on-chain data perspective, not a lot has massively changed. I think we're getting a little bit more clarity on how the remainder of this cycle may play out, especially considering correlations to previous cycles and patterns we're seeing in kind of investor behavior when looking at the data. But ultimately, things do look pretty good. It's one of these things where everyone wants to look at these charts every single day and look at what's changing. But a lot of these cycles take months or even years to play out. And so you're seeing the data saying kind of shifting into this more bullish latter stages of the market narrative. But ultimately, things are looking pretty good. And I'm definitely very bullish and positive on the outlook over the coming months.
Yeah, one thing that I've definitely noticed is in the past cycles, there was more of boom and bust. And now it seems to be more like stairways climbing. So it's like, yeah, like a little bit of sideways. Now we're like going up again, and we're like consolidating. And so I think because we don't have those huge uprises and huge down crashes, and also the market participants are just like very different. We have now the sailors and the BlackRocks of the world into Bitcoin versus the everyday guy that might be more inclined to FOMO in when the price goes up and to panic sell if the price goes down. So it's really interesting for me to compare like this cycle to even last cycle. And I don't know if you see the same thing, but I feel like the boom and bust gets like a little bit more just like climbing and climbing. We are kind of getting away from an exciting new startup tech stock to the S&P 500. I don't know, we are not there yet, but it's like it seems like we move in that direction.
Yeah, 100%. We're seeing this diminishing volatility where institutional inflows, just maybe not as much retail participation either, is just, as you say, kind of dampening these big violent swings we've typically had in price action. And I think that's something that we can maybe talk into a little bit more on this podcast, in that a lot of people are saying, is this time different? Because of course we're seeing institutions coming in, Seyr coming in and buying hundreds of thousands of Bitcoin, Metaplanet, etc., all just trying to pile into Bitcoin. Now, a lot of people are looking at this supply being accumulated and thinking, this might never hit the spot market again. So maybe we're not going to have these big bear cycles like we typically do. Maybe we still see these 30, 40% retracements, but maybe Bitcoin now is going to decouple and be this independent asset and go into this big super cycle of multi-years. But looking at the data, again, I don't like to be a bit of a party pooper, but we're not really seeing that just yet. Now, of course, I do think there is a growing influence of institutional participants, and that is changing the supply and demand economics of the network, and we're seeing that in the price action. So I do think that the cycles are going to change going forward. Maybe we're not going to have the same typical 4-year cycle like we historically have done. But if you look at kind of the ETF inflows, for example, I know these aren't specifically just institutions buying and selling when we look at the ETFs, but the correlation between their inflows and outflows and something like the Bitcoin funding rates is actually pretty high. So even though we're seeing more and more smart money, big capital coming into the markets, they're actually behaving kind of similarly to how they have done in previous cycles, because everyone's still susceptible to these big emotions, these periods of euphoria and greed. Everyone still likes to FOMO in, everyone capitulates in the bottom, regardless of how big their wallets are. So we do have some data to back that up, which I think could be interesting, because that's probably one of the most talked about points of discussion we're seeing on our channels and social media. Is this time different? Are we going to have this big super cycle? Will I ever be able to buy back in lower?
Yeah, it's always, for me, an interesting question also is for all the people, is 2026 being a down year? Because that's, people always, I know, for example, I'm a lunatic and I just buy Bitcoin. I have 100% in Bitcoin. Like I don't do anything with my Bitcoin, but I know a lot of people, and even my mom asked me, oh, is now a good time to buy? Like, oh, should I wait like half a year? Because I can wait also, because I'm not all in like you. So I hear that from my direct environment, but also in the comments and from people in general, and they're wondering, oh, like how much higher are we going, and especially will 2026 be a down year for those people that maybe also do lending and all those credit things. It's highly relevant. That's why I don't do it, because I don't want to be dependent on like where the price and the market is going. But I know a lot of people actually do that. This is, I think, why the super cycle talk is interesting, because if we now have different buyers and sellers in the market and they are more inclined to just buy over the long term or not really sell, does this mean that we are going slower up but more consistent up? So maybe we don't have a 2026 down year, because like I think 2026, if we follow the 4-year cycle, like up, down, up, down, and so on, then 2026 would have been a down year. What can you see on that front, and maybe also like how the cycle changed?
Yeah, I'll just share a chart here so that we can maybe discuss a little bit. So this is just looking at the current Bitcoin cycle in comparison to the previous cycles. Now, this is one of these things where I like to be pretty boring and just stick entirely to the data. We all have our own personal interpretations and opinions on how things might play out. And if I'm kind of being honest of what I think will happen, but not based on the data, I do see this cycle slightly extending. We have seen diminishing returns in every cycle, and again, expect to see that trend continue. But if we weren't see lengthening cycles, then this cycle would peak at around October 19th of this year, which would only give us a few months left of this current Bitcoin cycle, just looking at the previous cycles as inspiration. But like I said, I feel like we may be seeing lengthening cycles. If you look at sort of the 2020 to 2021 cycle as the kind of most recent comparison we had this big double top of price action, which kind of caught a lot of investors off guard. I think a lot of people, after we had this first peak and started to run back up against new all-time highs, were maybe expecting 100,000. And a lot of the on-chain data points kind of did top out in this first peak. So it did throw a lot of investors off in that regard. But this cycle has actually shown something slightly different to that still. So if I go to the value days destroyed chart here, so this might look a little bit more confusing, but it's actually a fairly simple chart in terms of its calculation. So what this is doing is looking at something called the coin days destroyed. So what this is doing is essentially weighting the velocity of Bitcoin transfers. So if you see big whales transferring huge amounts of Bitcoin, this is when we have these huge spikes to the upside. Now, if I was to hold one Bitcoin for 100 days and then transfer it, it'd be 100 coin days destroyed. If I held 0.1 for 1,000 days, it'd be the same. So we're really weighting the profit taking by these long-term experienced Bitcoin holders. Now, what we can see is they typically have a fairly big influence on the Bitcoin price action. They're usually taking profit towards peaks, not necessarily big cycle peaks, but as Bitcoin is having these big euphoric moves to the upside. Now, what we can see in previous cycles, such as the 2020, 2021, like I said before, we almost had this double top as Bitcoin's price action peaked. We had this huge wave of investors taking profit on their positions. And then a little bit later, as we had the second peak, again, a little bit more profit taking. Value days destroyed might not show this as well as some other charts. I'll maybe show a few there, such as the long and short-term holders as well after this. But if we look at this cycle, it's actually been a little different in that we've had this big run up to the upside when we had this ETF announcement, when we ran up to about $74,000. And then following that, we had about 6 months or so of just boring, choppy, sideways consolidation. Then we had this first break of 100K. And then again, we had multiple months of Bitcoin retracing, having a little period of drawdown and just a little bit of general capitulation as we retested the previous high. And then now we've again had this big run up to new all-time high. Again, a little bit of profit taking from long-term investors. And potentially now we're going to see this long drawn out cycle again. So like you said previously, we're having this almost stair action of price where we're having these big sideways moves, big run up, everyone takes profit. Investors are allowed to recompose themselves. New capital is allowed to flow in. A new foundation, a new baseline is set at whatever that price floor is. And then we have this big step up again. So we've actually seen something recently here. And again, I don't think this is necessarily indicating that we've had this cycle peak already. If we look at something like the 2017 peak, we had lots and lots of these very high spikes on the value days destroyed multiple. But it is indicating that the market cycle has changed and could potentially be stretched out to some extent because we're having these long periods of consolidation where investors can kind of allow themselves to feel like they're getting value for money again. Because if you look at 2017, if you see the Bitcoin price action at $10,000 and a few weeks ago it's $5,000, you maybe don't think you're getting the best value for money. But especially now if we're seeing institutional investors scaling into the market, regardless of price action, if they're seeing Bitcoin as a portfolio asset where you don't need to hold 1 or 5 or 10 Bitcoin, but you need to hold 1% or 5% of your portfolio in Bitcoin, then suddenly you're going to be scaling and regardless of price action. So that's going to diminish the volatility. And then once we're seeing these big run-ups to the upside in price action, and then price has these very stagnant periods, again, it resets expectations. People aren't thinking, oh, wow, no, I'm not getting value for money anymore because Bitcoin's price action has been 60K for multiple months. They think, well, this probably isn't a bad area to scale in. Or price has been 90K for multiple months. Or this time it might be 110K for multiple months. And then at that point, people say, yeah, I feel like I'm getting value for money here. So I do see this cycle being different, but that is my personal opinion of what could play out. As I always like to say, just pay attention to the data. If we start seeing warning signals, the market is just purely based on supply and demand economics. If we're seeing lots of people taking profit, if we're seeing lots of people over leveraged, if we're seeing retail foaming into the market, these are the times where you need to be taking profit or maybe just scaling back your accumulation of Bitcoin because you may not be getting the best risk to reward on that position. But as I said, it's just one of these where if we're at 130K, if we're at 230K, when the signals start flashing, that's when I'm going to be taking action.
Can you explain to me again what VDD is, so like value days destroyed?
Yes. So as I said previously, it's based on the coin days destroyed. But what we're doing is taking a 30-day average and comparing that to a yearly average. So again, a lot of people look at metrics such as the MVRVZ score. I'll just very quickly pull that up so you can have a comparison. And we'll look to on-chain data and say, maybe it's not going to work so well going forward because we've had these diminishing peaks in the data. So The MVRVZ score, I know I've gone a little bit off topic here, but this is comparing the realized price or realized cap of Bitcoin, which is the average accumulation or cost basis for all investors on the network, to the underlying price of Bitcoin. So what we can see is in the previous cycle, we had a much lower peak than we had done in the previous cycle. So a lot of people may be looking at this metric and thinking, I don't know if on-chain data is going to work so well. So that's why I really like metrics like the value days destroyed, because this is based on a rolling yearly average. So even as the dynamics of the network change, even as we're seeing supply not moving, even as we're seeing institutional accumulation, this metric is going to account for these changes in dynamics. So what this is doing, as I said, is just looking at the coin days destroyed, but then changing that into US dollar terms, and then dividing that 30-day average by a yearly average. So you can almost see on the most recent monthly basis, are people taking considerably more profit than they had done in the previous year.
Well, and what is the coin days destroyed?
So the coin days destroyed, I can just go to the chart quickly here. This is weighting Bitcoin transactions by the amount of time it had been held and the amount of Bitcoin being transacted. So if I transferred one Bitcoin after holding it for 100 days, then that would add 100 coin days destroyed. Recently, we actually had this big whale transfer 80,000 Bitcoin after holding it for just over 14 years. So this obviously had a huge influence on a metric like the coin days destroyed, because we saw a huge amount of Bitcoin being transferred after an extended period of time. So I know I'm going slightly off topic again, but many people may look at the coin days destroyed or something and say this is a huge amount of profit taking by big long-term investors. But I actually have a chart here which is something slightly different. So again, I know I'm going on a bit of a tangent here. When we accumulate all of the coin days destroyed on any given day or any given average, it can be influenced quite strongly by one individual's transaction or one big movement by an exchange or something. So what this is looking at is, rather than the amount of Bitcoin being transferred by whales, it's actually the number of whales transferring Bitcoin. So again, it might be a little harder to see, but when we have these big spikes, it not only indicates that there's a huge amount of Bitcoin being transferred, but it's actually being transferred by a huge amount of Bitcoin whales, to kind of give us some indication that not only is price exceptionally high and we're seeing a lot of Bitcoin moving, but this is the general consensus by a lot of the market's most experienced players. Whereas right now we're actually at a value pretty close to 1. This is a 28-day average of this metric. So we're seeing a lot of Bitcoin being moved on chain, but this was heavily influenced by certain individuals that maybe warped the data a little bit. So it does take a little bit of personal interpretation, but the value days destroyed, I think, does still give us a really good indication of where we could be in a cycle.
Oh, so basically it shows if there's a lot of coins moved that also haven't moved for a long time, then it shows that people are kind of taking profits and kind of moving the things. So if the multiple is very low, so the green areas there, this just means people are holding on to the coins and waiting for like a higher price in the future.
Exactly, yeah. And I know a lot of people will say, oh, but these are just coins being transferred on chain. We don't necessarily know if they're being moved to sell. We don't know if they're being OTC moved or collated in different wallets. And that is true. We don't necessarily know for certain that when coins that haven't been moved in 14 plus years are being moved, that they are being moved to be sold. But generally speaking, we can look at network activity and see a huge increase in old coins being moved towards cycle peaks, and we see a huge diminishing in that value. We see very, very few old coins being moved when we're at bear cycle lows. So even if it's not an exact science, we can say with some degree of certainty that when whales are moving coins and are interested, it's usually as we're approaching a little bit of a local peak in price action.
Is it if coins are moving in general, or do they have to move to an exchange or something?
Just being moved in general. So this is the thing. This is why it's not a perfect science, because we can't say for certain that they're being moved to an exchange. Again, people may be moving coins to an exchange just to stake them and earn some percentage reward, or take out loans against them, or whatever they may want to do. But this could be Bitcoin being transferred from my wallet to your wallet or something. Just anytime we're seeing Bitcoin being moved on chain, we're aggregating all of this data when we come up with a lot of these on-chain data points.
Yeah, because I was thinking like I'm in Bitcoin now since, 5 years. And in those 5 years, I've moved all of my coins multiple times as I upgraded my security. I didn't do anything with my coins, just like, first I just bought a ledger. I should have some multi-signature. This and that. I don't know how many times I moved my entire stack or like part of my stack in different kinds of settings, just because like, I want to increase my stack. But I guess it's still a good indicator because it shows how much activity is there, and if there's a lot of activity and they move it a lot, it shows that, yeah. But it's also interesting how this will change, because as Bitcoin grows in value and it will be a bigger and bigger part of people's portfolios, people might also want to start just spending it and just using the Bitcoin. For example, I have now a spending wallet where like the coins move like every fifth day or something like that. And if this gets more and more popular, it's interesting how those will influence also those metrics. I mean, I guess right now, most people just use it to store their wealth and are not, again, a lunatic like me.
Yeah. So, of course, we are seeing kind of, again, a shift in narrative of Bitcoin. Previously, I was just really quickly showing the value days destroyed having a spike at the tail end of the last bear market after the FTX collapse, because, again, a lot of people would have been moving their coins off of centralized exchanges onto ledgers. So, again, there are some instances where we need to kind of interpret the data a little bit more. But in terms of Bitcoin's narrative changing, again, I think this is a great topic to discuss. So I'm just going to once again try and share my screen. So when Bitcoin, when the white paper was first written by Satoshi, it was, I always get the exact ordering the wrong way. It was an electronic peer-to-peer cash system or something like that. Either way, we're seeing less and less Bitcoin actually being used for that. I think the narrative has shifted into a more store of value asset, which makes sense. No one wants to be the next Bitcoin pizza guy who spends $100,000 on a couple of pizzas, or millions of dollars it is these days. So if we look at something like the miner revenue in fees, we can actually see, if I just zoom in here, that the amount of revenue that Bitcoin miners have actually earned in block reward fees, not block reward, in fees in the block from Bitcoin being transferred on chain, we can actually see that this revenue is the lowest it has been since about 2012. So over 13 years ago was how long you have to go back to actually see miners earning as much Bitcoin in revenue than they have today. So I just think, again, this really explains how Bitcoin is changing a little bit. And this is why we can't really just focus on just the on-chain data, because if we're seeing, like we discussed previously, institutions, Seyr, big high net worth individuals accumulating Bitcoin, maybe with no intention of ever taking profit on that, then we need to look at Bitcoin through a slightly different lens. And this is where I think the ETFs have actually been really good for Bitcoin data, because if we just look at the ETF cumulative flows, for example, again, this is the cumulative. If we looked on a day by day, it looks fairly similar to the Bitcoin funding rates. This gives us another lens that we can actually analyze the market through. So previously in 2016, 2017, and the last cycle, we of course had the on-chain data. But if more people are putting their coins on exchanges like Binance or wherever they're trading, then again, we don't necessarily see exactly what those coins are doing. Whereas now with the ETFs, we can look through Bitcoin through the institutional lens, where we can see what do big money players think is upcoming in the Bitcoin price action. If they're heavily accumulating, then there's probably anticipation of higher prices. And if they're starting to offload some of their positions, again, maybe they're anticipating further downside, being a little bit more defensive. So now that we can actually observe and analyze Bitcoin, not through just on-chain data, but looking through institutional or ETF accumulation, as well as that, we have derivative data. Like I said, the funding rates previously have a fairly big correlation, fairly strong correlation with the ETF inflows and outflows. Again, we can look at Bitcoin through this derivative lens. We can look through a macroeconomic lens if we look through something like global liquidity. And along with that, we have technical if people are actually just trading based on the price action and charts. So there's multiple different lenses we can really analyze the market through. And I think that's when I personally make my best investment decisions, when I see confluence, when I see lots of indicators all pointing towards the same thing. If we're seeing Bitcoin funding rates incredibly high, everyone going very leveraged long, if we're seeing a huge amount of whales taking profit, we're seeing retail FOMOing in, all of these kind of point towards potentially a local peak in price action. And again, I often get a lot of slack because I'm quite open by saying I am going to take profit on my Bitcoin position at some point. I'm going to start selling, not 100%, but just a small portion of my portfolio. I'm going to try and sell so I can reaccumulate at lower prices. But you don't necessarily have to do that. You can just not scale in as aggressively when the market is maybe getting a little bit overheated. Just give yourself a little bit more value for money, a little bit more bang for your buck when the market is potentially a little bit of a discount.
And right now you're seeing that you might have the chance to buy back lower from here.
Yeah, so we'll go on to kind of what we're currently seeing in the market. So, of course, we broke to new highs above $120,000, and I was kind of a little bit wary of how much higher we could immediately go. So, we were seeing the Bitcoin funding rates at fairly elevated prices, the highest sustained funding rates that we'd seen in multiple months, pretty much all of this year, really. And now what these are looking at is the amount of interest, essentially, that perpetual derivatives futures traders are paying just to keep their position open. So on any of our charts, I know I'm just, of course, using Bitcoin Magazine Pro charts, but on any of them, if you want to understand a little bit more, you can just scroll down and get a little bit more insight into how these actually are calculated and the logic behind these charts. But we were seeing incredibly elevated funding rates. Again, even though we weren't seeing a huge number of individual whales actually taking profit on their positions, we were seeing metrics like the coin days destroyed getting slightly overheated. And of course, that resulted in the value days destroyed giving us slightly overheated levels as well. If we look to something like the short-term holder MVRV, so this is just the average accumulation price or cost basis for new market participants. And then when we look at the market value to realized value of that, the realized price to the actual underlying price of Bitcoin, we could again see that this was getting it slightly higher than we had been for a few months. So when we put all of these together, it maybe gives us a little indication the market isn't necessarily due for a big retracement, but potentially a little bit of cool off time. And we have seen that. We've now had a retracement to around 111,000. I think the local low was recently. And this is pretty typical, pretty normal. All we've done is gone back, retested the previous highs we'd set, and now we're kind of just already seeing a little bit of a strong bounce and reaction in the Bitcoin price action. This is very typical, very normal for a Bitcoin bull market. If we look back to 2017, we were having retracements of 30, 40, 50% fairly regularly. And they were coming back and touching this short-term holder realized price level, almost a moving average of support and resistance throughout Bitcoin bull and bear cycles. So now we're just coming back here and we're getting pretty close to this realized price. It's obviously trending to the upside as people continue to accumulate above this average. But if this starts to reach about $110,000, if we start to see the funding rates again, maybe turning negative or a lot more neutral, we see a decreased amount of profit taking from long-term Bitcoin holders. All of this would kind of point towards the market potentially getting to a point where it's looking much more favorable for some accumulation, much more favorable risk to reward for trying to actually buy in once we've got confluence from multiple data points, all saying that maybe this time of consolidation is over and we can actually now continue to hopefully regain new all-time highs.
Interesting. And I guess the question everyone wants to know is like what will be the top this cycle? And
I'd love to know.
where are we ending up this year? It's crazy, the speculation on that. I sometimes put out community polls of like, hey, where do you think the price is going to be topping out this year? And from I think like 500, 600K was the highest ones. I mean, there are like crazy ones, but like most of them are the highest ones on the 500K range, and the lowest are like 130. Like we are almost there with 130. I mean, there are of course bears that saying like, oh, it already reached the all-time high. How do you look at that?
So of course, the $1 million question, I'd love to be able to answer and say this is the price we're going to peak at, but honestly, no one truthfully knows this. Like I said previously, if we're starting to see a lot of the data points point towards a market cycle top, whether that price is at $130,000 or $500,000, at that point, I will be taking action. But that's a pretty boring answer. A much more exciting answer is to actually give some ideas. So based on the previous cycles, based on the diminishing returns we're seeing, my base case is probably somewhere around $170,000 to $180,000. Now this changes based on the data that we're seeing. If we're seeing a huge amount of profit taking that was maybe a little bit earlier than expected, then I'd maybe drop that to 150, 160. If we do see a huge amount of accumulation from potentially a Bitcoin strategic reserve, then again, all bets are off. Who knows how high we could go. So I like to think in terms of probabilities. 170, 180 would be my base case. I could see an ultra bull case, but to be honest, I'm seeing this being less and less likely as the cycle progresses, of somewhere around $220,000, $240,000. And again, a more bear case, I guess, of $130,000 to $140,000. You also have to acknowledge that Bitcoin is still very much correlated and influenced by traditional markets. We've seen a pullback in the S&P 500, again, coinciding with Bitcoin having this little bit of retracement. If we were to see a big global recession, a big drawn out bear market in equities, then Bitcoin is going to struggle. We haven't seen any evidence of a prolonged decoupling where Bitcoin moves as an independent asset, can maybe fulfill its narrative of being a hedge against bad monetary policy, but ultimately, at the minute, it does still look like we are currently acting as a high beta or a high leverage play of US equity markets. So it is still very much a speculative and risk on asset. If we can continue to see equity markets trend to the upside, then Bitcoin's likely going to do it incredibly well. But we are still, unfortunately, at the whim of what other markets are doing. So it's one of these. It's more just a gut feeling, a more personal interpretation, just looking at certain things on the charts, looking at certain patterns in the data to say around $170,000, $180,000. But yeah, ultimately no one knows. And if we see the sell signals at 150 or 500, I'll be taking action.
Yeah, it's more about like seeing all the signals of like, are we moving upwards or downwards? And also, as you pointed out, even if everything points to selling, if there is a big market participant coming in and saying like, I don't like what happens if all the signals are saying sell and then Apple comes out and says like, oh, we are converting 10% of our cash balance to Bitcoin. I mean, at that point, all the signals all of a sudden change. So Bitcoin is always this it's small enough to be changed by a big player still, even though we came a long way. And if you look back at like 2017, we were like such a small asset. Now we are like trillions of dollars worth. So it's like we've come a long way. It takes a lot more now to move Bitcoin than like just 5 years ago. 5 years ago, like if Apple would have moved into Bitcoin, I think like it's a straight up line. Now it's, I think, still a straight up line, but it takes it takes now a really big player to actually move Bitcoin and to actually influence the price and the market in there. And it gets more and more unlikely, I would say, that something extraordinary is happening because we already have huge players with BlackRock and Strategy and big other companies in the game. I talked about that, I think, a week ago or something like that, where 2020, it was very big news when Square bought $50 million of Bitcoin. Now, if any company buys $50 million of Bitcoin, nobody cares. It's like, it's a normal day. So I think it's interesting. Those tools might actually be like more and more predictable as individual small decision makers actually don't have that big of an influence on the market anymore. How do you look at that?
Yeah, and I totally agree. Of course, if Apple come in and say we're buying 1 million Bitcoin, that's going to change the dynamics to some extent. But like I said previously, the more things change, the more things do typically seem to stay the same. So there's a few different things we'll consider. But first, we'll just look at this chart, which is the realized cap hodder wave. So this is taking into account the realized cap or realized price, like we showed with the MVRVZ score, this price here, the average accumulation price of all Bitcoin on the network, which is around $50,000. The average investor paid around $50,000 for their Bitcoin. But if we go to the realized cap hodder waves, we can look at the percentage influence of different market participants on this price. So this is essentially retail FOMO in action. When we have these very red, warm colors indicating investors in the last 24 hours up to, say, 1 month, this gives us an indication of new people coming in and paying considerably more for their Bitcoin than historically was the norm. And again, the market is just supply and demand economics. Even though it's great to see Strategy accumulating all of this Bitcoin, even though it's amazing to see these ETFs pouring billions and billions of dollars in, realistically, still around 80% of all Bitcoin in circulation and active Bitcoin in circulation, so we're accounting for kind of lost coins and stuff as well a little bit there, is still held by everyday participants like you and I. A vast majority of Bitcoin is still held by individuals and still have a majority influence on the potential price action of the upcoming days, weeks, and months. So when we see a huge amount of people rushing into the market, again, good indication that we're potentially getting a little bit overheated. If we are to see Apple or someone start piling into the market and we see this huge influx of retail FOMO, where are Apple buying that Bitcoin from? The only way that they can actually buy 1 million Bitcoin is if there's 1 million Bitcoin willing to be sold by long-term holders who have been holding for multiple years, who are realizing that, hey, maybe this is my exit liquidity. Now that kind of brings me on to the second talking point. If someone wanted to buy $1 million, 1 million Bitcoin, say a Bitcoin strategic reserve came around as well. Bitcoin is still a relatively small asset. I know we like to say it's huge and it's grown exponentially, which it has from just a few $1 billion to a multi-trillion-dollar asset. But realistically, there is just not that much circulating supply of Bitcoin ready to go around. We are still a fairly illiquid asset. If we just look at the normal hodder waves rather than the realized cap hodder waves, so this is just not looking at the influence on the realized price or the average accumulation price of Bitcoin, but just the percentage of Bitcoin held by different age bands. What we can see is if we move all of them up to, say, the 6 months, so the short-term holders, we can see that there's still only around 20% of Bitcoin that's actually readily to move. That's actually moving on a biannually basis, which just shows us that even though we have seen a huge increase in the Bitcoin market cap and we have matured massively as an asset, there's still not that much liquidity to go around. If someone wanted to buy 1 million Bitcoin, they're going to have a real hard time doing so without causing a huge amount of slippage and seeing the market jump up probably hundreds of thousands of dollars. You can almost see this as well as a rough money multiplier effect. If we're seeing around 80% of Bitcoin not really available, only 20%, then every dollar that goes into the market likely is going to increase the market cap by about $5. So, of course, big investors are aware of this. Smart money aren't just piling in at whatever price, pressing the market buy button. If we are to see further accumulation, which I believe we will from potentially more Treasury companies, other companies like Apple potentially putting on their balance sheets, then we are going to see a very positive influence on the Bitcoin price action. But it is likely going to be trickled in and cause, again, even more price action like we've already seen of this kind of long, choppy, sideways consolidation as this price action is scaling in before these big explosive moves to the upside. Again, just diminishing the volatility, taking advantage of these 20, 30, 40% dips. And when that happens, we'll be able to see by looking at the on-chain data that a huge amount of capital is coming in to actually purchase Bitcoin at these lower prices. But so far in this cycle, we haven't really seen this smart money acting very smart. They're still susceptible to the same feelings and emotions that we all are, because all this data is really showing us is the mass psychology of investors just quantified.
It's super interesting to think about that situation of someone in the market, no matter who this is, wants to buy 1 million Bitcoin and they're moving as aggressively as possible. Say, like, there are not a lot of players in general that can even do that at that point. I think Apple and the US are two players that absolutely can do that over time. But it still will be so hard because you just described it, and I've never thought about it in particular, because if you have a player that is big and public like Apple and US, like Apple cannot buy for long without someone noticing. Latest at the quarterly calls, like it has to be disclosed. I don't know how long, what's the maximum duration they can buy without them having to report it and without them noticing something. That alone is a challenge. I think like the maximum is probably like 3 months, maybe shorter than that. I don't know how the SEC and the Apple things work in that regard, but they cannot do it for a long time. So if there's a big player that really wants to accumulate, they have to say it. They have to say why they're doing it. It will be extremely bullish from a news cycle. And then they're trying to buy a lot of coins. Like Apple does not want to have like 10,000 coins if their strategy with like 500,000 or like 600,000. So they likely want to be the top dog in the game also with the coin. So that's a super interesting, like the supply and the demand. Like I think if Apple does it, I think I have to have you daily on. It will be super interesting how the supply and demand equation changes and how hard it will be for them to even do that.
Yeah, I mean, like I said previously, these big institutional players aren't looking to buy 10,000 Bitcoin, because what's 10,000 Bitcoin to Apple? If they have trillions of dollars potentially of spare cash, they want to put X percentage of that into Bitcoin. And unfortunately, if that's going to move the market 50%, if they just put 1% of their, spare capital into Bitcoin, then it's not really worth it for them. So Bitcoin supply and demand economics actually grow more favorable as price increases. People would think the cheaper it is, the more it's kind of enticing for people to accumulate at a discount. But especially, like we said, for players like Apple, we really need to see Bitcoin at hundreds of thousands of dollars and a multi-trillion-dollar asset before they can even really consciously do it without having this huge influence on the market. So it's one of these really bullish things where the more we see the price go up, the more bullish I get, which is kind of counterintuitive. But over a long time scale, over the next kind of 5, 10, 15, 20 years, it's exciting and kind of unimaginable to believe where we could be in the market, where every single index fund, every single investor is having 1, 2, 5% of their portfolio into Bitcoin. And suddenly that opens the door to tens of trillions of dollars of inflows. And then again, like when we look at something like the money multiplier effect, this has this massive increase in the market cap far beyond the capital inflows that we've seen.
And it unlocks new capital, which is an interesting equation. We know with players coming in like Seyr, he builds those tools to unlock locked capital, and with a higher price at the same time, we're not only getting more interesting people in from the traditional financial space that build those products to get more money from all the other markets to Bitcoin, but also it gets to be a big liquid market where then all of a sudden the pension funds, the Apples of the world can join and say like, hey, we can buy and sell things in this market without crashing and booming in the market. Because Apple does not want to be in a situation if they decide to buy 1 million Bitcoin and then sell like 200,000, that they buy, the price shoots up and then they sell, they're like, they have to so carefully sell, do not dunk the market. And we've seen that in 2021, where at that time, I think the richest man alive, Elon Musk, bought and then like dunked on Bitcoin. And we literally just like went up and then back to the same point again. And I think now we are way more stable. But maybe we are not stable enough for an Apple player, Apple-like player. I mean, people keep saying like Tesla is already in the game, but I don't know, like it's a different player. I know Tesla is a huge company. They are fast growing. They have really good potential to be an Apple or Facebook or Google of the world. But they're very different from the structure of the management team, and from the overall financial structure, because Elon Musk can just decide things at Tesla. Like Apple, Tim Cook is not in control alone of where Apple is going. Even if he wants to buy Bitcoin, and we know that he has Bitcoin in his private portfolio, he said that on interview. But if he wants to do the same thing for Apple, it's not that easy to just like, oh yeah, let's buy it tomorrow. Like that's not happening.
Yeah, I do think, of course, I'll just share some more charts here. We have actually, again, seen kind of this steady shift already. This is looking at the amount of addresses on the Bitcoin network that are holding at least 100 Bitcoin. And we can see that this is continuing to climb to new all-time highs. So clearly we are getting there. We are progressing to this asset, which anyone, regardless of their wealth, is able to scale into without having this huge influence on the underlying price of Bitcoin, which is very promising to see. But one other thing, like we said, maybe Apple isn't quite ready yet, but looking at treasury companies, other treasury companies, we can see that we've already opened the door to hundreds of billions, well, $105 billion worth of capital inflows from public companies already. And this, again, is just continuing to grow. Of course, Strategy is leading the way with nearly 630,000 Bitcoin, but we can see nearly 1 million Bitcoin has been accumulated by these treasury companies in just the past couple of years. And it wouldn't surprise me if in a few years' time, this number is 2, 3, 4 plus million Bitcoin accumulated, because again, people are starting to wake up to the Seyr playbook. People are seeing their purchasing power by holding the US dollar or other fiat currencies continuing to diminish. And especially if you're a company that maybe, I don't want to be mean, but maybe isn't succeeding. Realistically, Strategy, of course, they have their underlying software business, but they're a Bitcoin company now. The revenue from their underlying business model is minimal compared to the tens of billions of dollars worth of Bitcoin that they have. And for other treasury companies coming in, this is a really good way to potentially open the door to more liquidity coming in, to higher share prices. People, get excited about a Bitcoin accumulation strategy. And again, we're seeing this through Metaplanet, we're seeing this through the blockchain group, we're seeing this through lots and lots of companies who are now seeing the potential of doing this, again, not just to see their share price massively increase, but especially just to prevent diminishing capital on their balance sheets being held in fiat currencies. So it is interesting to see, and I think Seyr really is opening the door, especially with the new derivative products like the Stretch and Strike and Stride, etc., all coming out and just, really opening the door to the bonds market, and the new STRC open the door just to the liquidity market, potentially acting as almost a stable coin for new capital to flow in to accumulate Bitcoin. So it's really exciting to see, and all these new products coming out is just unknown territory. I mean, this is just something we've never seen before, something that hasn't really existed before. And it's great to see all coming out. I will put a little asterisk next to that and say, when we have the inevitable bear market, which is going to come. Every market class throughout history has had boom and bust cycles. When we do see this 30, 40, 50, 60% bear market, who knows how all the other treasury companies will survive. I think that's going to be the true test of how committed they are to the Bitcoin playbook and, how much they can actually withstand in terms of drawdown before shareholders start asking questions. But it is interesting to see, and it is interesting to imagine how the supply and dynamics are going to continue to play and evolve throughout the coming years.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilant represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. Is this actually something that you're seeing? Does those products like the Stretch and the Stride and the Strive from Strategy and maybe even other treasury companies, do they change things from your perspective, from on-chain, but also other data points that you're seeing, or do you expect that they will change something in the coming years?
So, I mean, we're seeing, if we look at something like the addresses holding 100 BTC increasing, that's obviously something we can track in real time. But realistically, all of these treasury companies are accumulating and holding through centralized custodians like Coinbase. So it's not like we can see every single transaction happening and the underlying ledger of how much Bitcoin is actually being held by Strategy and what their addresses are. That data just isn't publicly available yet. But we are seeing the spot markets being shifted by this continued accumulation. We are seeing the circulating supply, not the actual circulating supply, but the circulating supply that is available for people to accumulate when looking at something like the hodl waves continuing to diminish. So we are seeing the effects of this happening. And like I said, this is actually great because everyone points towards on-chain data potentially breaking and becoming less useful going forward because of this accumulation. But if you look back to 2016, 2017, when 70% of all volume was happening on centralized exchanges like Binance, it's not like we could really see what was happening there, but you look towards the on-chain data and it still worked incredibly well. It's almost like a census. If you're trying to gain some insights into how many people watch a certain TV show, how many people listen to this certain radio channel, you don't have to ask every single person in the country. You only have to ask a select few thousand, and suddenly that gives you enough kind of insight into what's happening. So we don't have to know exactly what every single investor is doing, but if we can see a general trend that majority of the network's active users are beginning to take profit or beginning to accumulate, then we can really start to take action on that. So I think it's very promising that we're seeing this kind of shift in dynamics. Like I said, it gives us another point of confluence that we can see. But realistically, all of these coins being put onto Coinbase potentially opens the argument of paper Bitcoin being transferred and all of the Bitcoin being accumulated by these ETFs. Are they ever really hitting the open market again, or are they just keeping their own centralized ledger internally? Again, who knows? We can speculate and we can talk controversies, but ultimately, I think regardless of all of that, the data is still being very clear and obvious, and it is still showing us exactly how the market is actually evolving.
That's all super interesting. It's one thing that came to my mind, maybe it's like a little bit off topic, but I know people are super interested in that too. When you saw how many addresses have like 100 Bitcoin or more, what does it actually take to be in the top percent of Bitcoiners? Have you looked into that, of like seeing like, okay, if you wanna like, because like those stacking goals are really popular and people are like, oh, I want to get to X amount of sats. Do you have something to show of like how many Satoshis, how many Bitcoin, whatever the thing is, to get in the top 1, top 5, top 10, whatever percentage of Bitcoin hodlers? I mean, of course, this changes over time as Bitcoin gets more mainstream, but do you have something like that?
Good question. No, we actually don't. So I'm actually just cheating and looking this up now. So to be in the top 1%, you'd need to be somewhere around it's a pretty wide range of 1 to 10 Bitcoin. But if you're holding at least 1 Bitcoin, you're in the top, 2%, let's say. So again, I think this is a thing that a lot of people historically have really focused on, is I need to accumulate 1 Bitcoin. And I think for everyday retail investors, that is great. I do think that is a good goal to have, because eventually 1 Bitcoin potentially could be your entire retirement plan. But a lot of the new market participants are coming in and having this narrative shift into a portfolio asset, saying, I don't need to have 10,000 Bitcoin, I need to have 10% in Bitcoin. So again, if you're someone who gets paid in fiat currencies, it can make sense to just dollar cost average in and just hold X% of your position in Bitcoin. As much as I hold 100% in Bitcoin, I wouldn't suggest it for the everyday investor. I think that there's certain people that have a risk tolerance that's a little bit tamer than ours, we'll say. And again, especially if you're a little bit later in life and you wanted to maybe have a little bit more of a steady retirement plan without big 50, 60% drawdowns, then maybe you don't want to go 100%. But we can see by the data that holding X percentage of Bitcoin massively increases your performance. And it doesn't have to be a huge amount. Even if you're just dipping your toes into the water, 1% of Bitcoin can massively outperform a 60-40 portfolio of equities and bonds if the rest was just in cash historically. So it's unbelievable the outperformance you can get from holding Bitcoin as an asset. And especially if you wanted to take that a step further, there are assets like Strategy and their derivative products as well, which can offer slightly different exposure to the market. So there's lots and lots of different avenues you can take. I don't necessarily think that just focusing on X Bitcoin is the right approach, but of course, you do you. I just think it's great that people are trying to actively learn more about how to preserve their wealth and try and accumulate more wealth through Bitcoin, through these products, rather than just historically, being taught, put everything in the S&P, let it do its thing, or, don't really acknowledge the detrimental impacts of the inflation rate increasing and the decreasing purchasing power we're seeing, year on year. So in general, I think it's a good thing. But yeah, back to the original question in terms of the percentage to actually reach certain thresholds, I can't see. And the reason we actually don't have that is it's a slightly warped metric, we'll say, because someone could have 100 Bitcoin but keep them in 0.5 BTC wallets and have just a couple hundred of them. So it's impossible to really aggregate all of that and understand exactly how much Bitcoin every investor has, because anyone can create a wallet and just add, a few Satoshis to it. But ultimately, just do what you can do within your risk tolerance. Understand that we are going to have these boom and bust cycles.
Yeah, I think it's a good way to look at it. And it's also those like if you look in the history of like, let's go back 10 years and someone would have said, oh, you need to reach like 50 Bitcoin or like 20 Bitcoin. And that would have been probably great advice like 10 years ago and probably achievable 10 years ago. But the even better advice is like study Bitcoin as hard as possible. And then once you understand it and you're convicted about it, go balls deep. I think that is probably even like better thing, because maybe then 10 years ago, you wouldn't have bought 20 Bitcoin, which is an amazing amount, which is like probably more than most people will ever have. But if you would have actually studied Bitcoin deeply, actually made your conviction and actually pointed to like, oh, like what else would I hold outside of Bitcoin? Maybe you would have bought 100, 200, maybe 1,000 Bitcoin. I have no clue what the price was in 2015, but I guess even like 1,000 Bitcoin was back then kind of reachable. So it is interesting to think about those strategies of like, oh, get to X amount of Bitcoin. I'm like, yeah, get there. And then don't stop. Keep going. You keep going. I always regretted not buying more early on. And I think almost everyone does.
Yeah, I was going to say, who doesn't?
who doesn't? So yeah, but yeah, I think one Bitcoin is an interesting goal nowadays because it's still achievable. I would guess for most of my audience, they either have that, or it might be achievable. It's always like hard to say, but like I think it's like one Bitcoin is still for the Western civilization, and I know like most audiences from America, UK, Canada, Australia, Europe. For most, it is achievable, and I know that because if you look at the average wealth a person has in those countries, it's over 100K. So if you really are convicted of Bitcoin and you have a house, you have this and that, like you could go balls deep into Bitcoin, sell everything, and you could reach that one Bitcoin. That's why I'm saying, like, if you go balls deep and if you really think, you could actually go ahead and do that. But I think most people are not prepared to sacrifice so much just to get to one Bitcoin.
Yeah, I mean, we actually have the data of how many wallets there are holding one Bitcoin. And again, I said it's not a perfect data point because you could hold 0.5 Bitcoin in your own wallet, 0.5 on a centralized exchange or in ETF or other products. So it's not an exact science, but we can see it's actually been diminishing over the past few months, potentially due to the ETFs and other avenues for people to gain exposure to the market. But it's somewhere around 1 million different wallets holding one Bitcoin. So it's, definitely achievable, but I don't think it's going to be achievable for too much longer for a vast majority of people. But one other data point I think has been really interesting because a lot of people say to me, you know, if we do see the super cycle, we're never going to see this big drawdowns. We're never going to have the opportunity to buy back in lower. I think a lot of people are worried that if they do take profit on even a small portion of their Bitcoin, that might be Bitcoin that they can never reasonably regain, that they can never accumulate again because the price is going to continue to accelerate away from them. So as I said, if you don't want to sell your Bitcoin, you don't have to sell your Bitcoin. That's great. You do you. However, I've done some analysis in this. So what this is showing us is on this chart, it is the percentage probability of being able to buy Bitcoin back at a lower price. So to actually just take this into account, I did this analysis at the tail end of the previous bear market. And I looked at any day we were above the 1 year moving average of Bitcoin. So this is the red line here. So literally just the 365 day. If you sold on any day throughout Bitcoin's entire history above the 1 year moving average, you had a 50-50 chance of being able to buy back in 39.5% lower. So of course, that might not happen this cycle. We can see in the screenshot here, in the last cycle, we had nearly a 78% drawdown. If we are seeing diminishing volatility, that might only be 40, 50, 60% in the next cycle. But there is always going to be boom and bust cycles. And the fact that it was basically a coin flip chance of being able to buy back in 40% lower. And again, this is just any day above the 365-day moving average. You could have sold, it's a bit off the chart here, but down here at kind of $10,000. And of course, you wouldn't have had the opportunity, but it's taking into account every single day of Bitcoin's history. You had a 50-50 chance if you sold above the 1 year moving average. Now, if you take into account the other data points we have to really see when the market's getting overheated, to see when retail are FOMOing in, to see when long-term whales with huge amounts of Bitcoin are beginning to take some profit, to see when the institutions are maybe getting a bit ahead of themselves, see when people are over-leveraged and you can start taking profit to these upper regions towards a bull market. Again, you don't have to be perfect. And everyone likes to think, oh, I'm just going to sell 100% right at the peak. that's pretty much impossible to do. Everyone advises dollar cost averaging in or scaling into your positions. Just do the same for getting out of your positions. Dollar cost average out, start to scale out, take some profit gradually as Bitcoin's price is moving higher to lock in as high a price as you can. And there's a decent chance, if you can time the market even semi-well, that you're going to have a really good opportunity to buy back in, potentially at significantly lower prices. Now, this is just on Bitcoin. I actually did the analysis as well on the altcoin market, excluding stablecoins. So this is the ticker on TradingView, total 2 ES. And this isn't even selling above the 1 year moving average. This is any day, throughout any day of altcoins history, you had a 50-50 chance of selling and being able to buy back 48.4% lower. So if you can time the market with any reasonable degree of accuracy, you have a very, very decent opportunity to, again, scale back in and accumulate more Bitcoin. Because to me, the only thing better than Bitcoin is more Bitcoin. So I'm going to do everything in my power to just scale out a few percentage of my total portfolio, my total position, to accumulate back in at lower prices. And the data point towards that being, a realistic opportunity and a realistic probability. Now, I don't think we're always going to have this opportunity as Bitcoin grows as an asset class, as we surpass gold's market cap and we're at tens of trillions of dollars in market cap. Maybe we don't have these big, massive, volatile swings of 80% to the downside. Maybe we only see these 20% drawdowns like we see in traditional markets or indexes like the S&P 500. And at that point, it's going to be incredibly difficult to try and time the market to any extent. So I think now is really the opportunity. We probably only have a cycle or two left where we can really rely on these metrics to massively actually outperform just blind dollar cost averaging or blind holding. And again, if you want to do that, that's absolutely fine. But for me and a lot of the investors and people that use our charts and use our data points to try and actually understand the market a little bit better, the data actually points towards it being genuinely probable that you can actually outperform people by just focusing on the data and excluding your own personal emotion and biases when it comes to buying and selling Bitcoin.
Makes a lot of sense. Super interesting because it's the chances of buying back low and my dad, for example, does that actually. He tries it always, like he holds, I think, like around 90% of his Bitcoin, and then like with 10% he kind of tries to like buy back lower, like buy back in and stuff like that. And I always argue with him because like I'm just like he has maybe like more time, but like I'm just really focused on the podcast, and every other time just goes into like family and friends. So I don't want to kind of like really use my time to see all those metrics, but maybe it's not even looking at a lot of metrics, because you're looking maybe at like, I don't know, 4 or 5 charts and seeing like, oh yeah, like all of them say like, oh, now it's like really overheated and I might should take off a little bit. Oh, no, it's like a little bit up. So maybe now I can go a little bit heavy on things. I just, I don't know. I still feel like if I look back of my 5 years, I probably would have with your strategy more Bitcoin now, like especially because at some point the waiting period of in Austria was like, if you hold it longer than a year, you can take advantage of like doing it tax free, because like taxes also with selling a discussion. People always get very weary with like spending Bitcoin, because then you're like, oh shit, I have to pay taxes. And I think one thing that Bitcoiners hate more than anything is paying taxes. I got to know.
Yep.
So that's a big thing also. And I don't know. I know that's probably is a good strategy, and still like I'll just stick with my buying Bitcoin at any time.
As I said, there's no right or wrong answer. In a year or two's time, I might have completely mistimed everything, and failed and not going to be able to reaccumulate as much Bitcoin as I previously had. But this is risk and reward. It's investing. No one knows exactly what's going to happen. We're working on probabilities. But just to quickly give one last point potentially is, I mentioned this before, was potentially strategically dollar cost averaging in. So I'll explain the strategy a little bit afterwards on how this is actually based. But this is looking at a baseline comparison of just dollar cost averaging in 4 years ago into Bitcoin. So the starting price being just under $44,000. So a decent amount. And if you dollar cost average in, this was $10 a week, that would have turned into about $5,860 4 years later. So definitely not bad returns. If you just lump sum bought, it would have actually been a little bit lower than that, you'd have actually underperformed dollar cost averaging in because you're not scaling in as the market actually goes in a downtrend and into a bear market. But if you were able to strategically dollar cost average into the market, you'd have actually invested less. The total invested returns, I think, were here $2,090. It's refreshed, so it's not showing exactly. So you'd have actually invested a little bit less because you haven't invested fully, because there were times when you were potentially waiting for a dip or a discounted Bitcoin. And by doing this strategic dollar cost averaging, you'd have actually returned about $8,000. And this strategy was incredibly simple. All it was looking at was the short-term holder MVRV, again, a chart we've already looked at. And it was just not buying when the short-term holder MVRV was above 1.2. So any week that it's beneath that, you can dollar cost average in like you usually do. Any week where it's above that, you're just saving that capital until we're once again beneath it, and you can again scale in a little bit more aggressively once the market has had a little bit of a pullback. So literally just looking at when the market is at its most overheated moments and just not dollar cost averaging at those points, doing the strategic dollar cost averaging, you'd have actually outperformed, again, blind dollar cost averaging in or lump sum investing into the market. So whatever you want to do as an investor, there's no right or wrong answer. It doesn't matter if you're wanting to buy and sell actively or you're an intraday trader. I know, like you said before, there's 1,000,001 different charts. Realistically, I'm only going to be focusing on about 5 or 6 throughout my remainder of this cycle when it comes to trying to time out my distribution and profit taking into the cycle. But there's charts for people who are looking on a multi-cycle basis, charts for people looking on an intraday basis for more frequent trading. Whatever it is you're trying to do, I think you can just look at the data and leverage it to your advantage, just to suit however your Bitcoin thesis is and to really accommodate for your accumulation or profit taking strategy.
Is the chart that you just showed us the most important for you? Is like that's like, if you only look at one, is that the one you would have looked?
Again, I try to keep everything simple when I do these types of analysis. If you would have looked for confluence and looked at not just the short-term holder MVRV, but alongside that something like the funding rates or something like the realized cap order waves, I'm sure you could have outperformed even further. But I don't like to do any overfitting when it comes to these type of analysis. I don't want to say, oh, well, if you'd have done these exact 4 charts historically, because realistically, half of them might not work indefinitely going forward. So I'm sure you could do this analysis with 1 or 5 different charts combined or individually and potentially come up with similar results. This was just one very simpler explanation. But again, I think one that's probably a decent one as a starting point, because it is really obvious to see when new market participants have had X% profit of unrealized gains, that maybe the market is getting a little bit overheated, because it's just investor emotion, investor psychology. When everyone starts taking screenshots on their crypto exchange account or choosing what Lamborghini they should have bought or messaging their friends and saying, oh, I told you should have bought, usually that happens when short-term holders are reaching 20, 30, 40% profit. And at that point, historically, we can see the market's a little bit overheated when that happens. So just don't accumulate during those times. Accumulate when everyone's, damn, I really should have taken profit there. Or, yeah, maybe I shouldn't have been so cocky and egotistical when I was telling everyone that before. Just wait until we've got a little bit of a discount again. And again, you get a little bit more bang for your buck.
And I see it all the time. I've seen it, and I'm so frustrated about that actually, with friends and families where they got into Bitcoin, they made some profits and they sold, and they're like, oh wow, like thank you for the Bitcoin thing. I'm like, yeah, like you still hold it? I'm like, no, I sold it with like 40% profits. That's amazing. I'm like, yeah, like that's amazing. But what if you just held through it, or like just DC it all the way? And otherwise they put the money in and then sold and bought some shit for that. And I'm like, is that all retail does? Is that the average retail mind? I'm glad the institutions are here now. That's like it's if that's the average blab out there, like we are screwed. I'm trying my best to like really promote like long-term viewing, like DCA, like be strategic about it, be good with it, and even if you do a strategic DCA, or like you do a DCA, or you do lump sum buying, like the main point I was always trying to do, be as long as possible in the market. Like that's the main thing. Like in any of those charts that you just showed, no matter what strategy, if you hold Bitcoin, that's the game. Like, make sure you hold on to your Bitcoin, and don't mess it up with like losing losing access to it, or like getting hacked, or selling it to buy some shit. Like if you're selling it, make it for an investment case, or like for you to like get back into Bitcoin at lower prices, but not like to sell Bitcoin to just buy some leather jacket.
Yeah, exactly. Yeah, I'm the same. And as I said, there's if I'm proven wrong, if I start taking profit on Bitcoin and we rally two, three, four times higher than when I started taking profit, so be it. But as I said, I'm not selling everything. This is a small portion of my portfolio that I'm willing to have a little bit of risk for higher reward on. But again, back to your point, holding Bitcoin till today throughout any point of history has been 99.6% profitable, which is very difficult to outperform. So of course, this is the best way to actually be in Bitcoin, just to hold Bitcoin. It doesn't matter if you're dollar cost averaging or lump sum in. I know when I first got in, it was down here, and then I ended up buying the top and selling the bottom like most people typically do. But after that, when you kind of realize what Bitcoin is and the potential that it provides for monetary preservation going forward, and, you know, individual freedom when it comes to censorship resistant money, it's amazing to just have this opportunity. And I think everyone, again, regardless of what your thoughts are, should always have at least some exposure to the market, because really there's nothing else quite like Bitcoin. There's imitations, there's other altcoins which always promise to be something better but never are. But realistically, there's one, there only ever has been, and there only ever will be one Bitcoin. And yeah, it's something I'm going to hold indefinitely. And anything I do in between now and death is just going to be to accumulate more of it.
I love that. And one more thing I wanted to talk with you. You brought it up beforehand, and I actually wasn't aware of that. The Elon comments on X, and I found it, and I just want to show it to people quickly. So now it's the time for me to finally share my screen. Let's do that. And he basically asked, I think here it shows it nicely. He basically asked Grok, estimate the probability of quantum computing cracking SHA-256. And Grok basically said it's a near 0% chance in the next 5 years and under 10% chance in the next 10 years till 2035. So, and he explains like why and all those things. But the main thing is like, it's highly unlikely that it is a problem anytime soon, but it might be a problem down the road. So as Bitcoiners are, they're very careful with like what to do with the Bitcoin and like how to make sure Bitcoin is an asset not just for the next 10 years, but for the next 100, potentially for the next 1,000 years. How do you look at quantum computers and what challenges comes with that?
At some point, we are going to have to move to a new encryption method. We're going to have to move away from SHA-256 and go to something quantum resistant. At some point, we are going to see Satoshi's million coins move, and at that point, we're potentially going to have to say people need to migrate to the new quantum resistant Bitcoin and have a 2-year grace period. This is the thing. It's crazy to imagine what the future may hold, because quantum computing is, of course, just one element of this. We're seeing the halving reduce the block reward of Bitcoin by 50% every 4 years. And we're seeing alongside that, the miner revenue from fees continue to diminish as layer 2 solutions like the Lightning Network continue to grow. So at some point, is there growing incentive for miners to continue secure the blockchain if there isn't the monetary reward for doing so? And alongside the quantum issue, there's many other things that Bitcoiners need to be aware of that, again, this isn't something that is going to be a real issue for multiple decades probably. But I think Bitcoin, we really should look at it as you said, a 100-year asset or a 1,000-year asset, rather than people currently looking, oh yeah, but it's great to see ETF accumulating these smart monies, these big capital buyers going and pumping out bags. Yeah, this is great, but ultimately, is this beneficial for the long-term probability of Bitcoin's success? It's arguable. I think quantum computing, it's one of those difficult ones where there's not an ideal solution yet. But again, I'm not the first one to say this. Once quantum computing has actually reached that level of computational power, Bitcoin isn't going to be the first thing these nefarious actors are going to be cracking. They're going to be cracking banks, traditional banking systems, nuclear launch codes. Pretty much every other encrypted data in the world is probably more favorable for people to, actually try and crack than Bitcoin is. Because ultimately, if you broke Bitcoin, then you're probably going to see the Bitcoin price tumble catastrophically, which doesn't really give any financial incentive. If you look from a game theory perspective, it'd be much more favorable to accumulate Bitcoin as much as you could and then start breaking the traditional banking system and require everyone to flood into Bitcoin. So there's a few things to consider. It's a really interesting thing. Like I said, it's nothing that we really need to worry about for a few years or decades even. But there's a few little things in Bitcoin that we really need to start thinking about. And another one just being the unit of BTC. At some point, one Bitcoin is probably just going to be unobtainable for a vast majority of the world Do we start talking in sats, or do we start talking in bits, or do we come up with a smaller denomination that's just the new standard? There's a few different psychological, technical, monetary factors that still need to be considered, but Bitcoin is a software. It's a growing organism. It's not something that was made, 15 years ago and is now just existing. Every single day, Bitcoin gets better. People are developing Bitcoin. It is a piece of software that's going to adapt and evolve and become whatever we need Bitcoin to be. If there's a new mechanism or a new privacy solution on a different cryptocurrency, great, that can act as a test net. Bitcoin can adopt that. In a few years, we have an even better Bitcoin. Every single day that Bitcoin exists, its probability of surviving indefinitely increases exponentially. And I truly believe that. So as much as there are things that we need to start thinking about, hopefully there's people a lot smarter than me out there that are coming up with better solutions than I have. And we are going to see Bitcoin far outlive all of us.
Interesting, yeah. If we look at and this is something that I'm really a little bit concerned about. I think, first of all, before we start, I think Bitcoin will outgrow all of us, and I think Bitcoin will be the future money for the next hundreds of next thousands, maybe potentially next tens of thousands of years. Even though it's very hard to look that far ahead, and I'm just really looking forward to the discussions in the community of how to implement that, because I think there's nobody saying we should stay on SHA-256 if there is the technology to break that. I think nobody will argue for that. It will be a stupid argument to make, but there will become a lot of different arguments of okay, we are doing an upgrade, so how should we implement that? What is the best solution for that? And I know there are already proposals out there, and there's a few potentials that we could already do. But the closer and closer we come to that reality, there will come hundreds of proposals out there. And my only concern right now is that the community is completely split upon maybe 2 or 3 favorites that we can go towards. Maybe even only 2 that we're oh, do we do this or that? And this is the only thing where I see a little bit of a potential challenge, that the community is so split apart. 2 different things. I don't know, Michael Saylor wants that, Seyr wants that, Robert Breedlove wants that, and Natalie Brunel wants that. We have basically 2 big camps with popular exchanges, River wants that, Swan does that. Mining companies are split. This is where it could be interesting, but again, the Bitcoin users decide, and at the end of the day, there will be one solution that will win out. It will just be one very, very interesting time to observe the Bitcoin network. I think that's where I want to get.
100%. And I mean, it's not something new. We had this with the block size wars with Bitcoin Cash and Bitcoin Satoshi Vision. And this is why Bitcoin's great, because you can spin up a node and you can vote and you can support the blockchain that you believe to be the real Bitcoin. And then whatever the general consensus is, that's the real Bitcoin. This is a true democracy of software and monetary evolution, in that it doesn't matter if one person thinks one thing and one person thinks another thing. Realistically, we all supposedly have, well, I say supposedly, other people can, I guess, spin up lots of nodes and potentially sway things, but realistically, we all have an equal amount of voting power to decide what we want Bitcoin to be. And I think a lot of people are looking at Bitcoin through a 2-dimensional lens of how much wealth can I accumulate through Bitcoin? What can it buy me? But again, this is missing the greater good and the bigger point of Bitcoin, in that this is a technological and fiscal revolution that we can actually decide on, that we don't have to rely on the higher ups, the bankers and the politicians to actually decide what the future of the asset will be. This is something we can all collectively agree on to be the best solution and implement that with our own free will.
I 100% agree. Will be really fun to see. I'm already looking forward to the discussions. I'll probably host debates at that point. Will be a really fun time, at least for me as a podcast and commentary. Thank you so much, Matt. before we get to the end routine, we have one question that I asked each and every one of my returning guests, and you have been on before. And so the question is, what have you learned outside of Bitcoin since your last appearance?
Wow, that's a good question. Remember last time you asked me for a question for the next podcast guest?
That's still on. But that's a new. This is just a question for all the returning guests.
Okay, that is a good question. One thing I've learned outside of Bitcoin since my last appearance. I kind of wish you'd have asked me this before. It seems like such a simple question when you sat here after having like just talked for an hour straight.
I'm telling you, like 80% or 90% of my guests are pausing for the first time ever in the podcast for that one question, and it's super fun to see because all the questions that I'm asking are kind of tailored or influenced by my guest, of course. Like why should I ask something that my guest like doesn't even want to talk about or doesn't have any experience or skills in that field? So obviously the whole podcast, and I see that because it's I edit the podcast, and there's like the line, and Riverside automatically cuts out the pieces where people take a long break, and there's always, like in 95% of my podcast, is always a long break right before, right after I ask that question. So if I just see the podcast, I know exactly where I ask the question, because almost everyone is like, oh wait, outside of Bitcoin, like my life, and I'm the same. And it's super fun because I asked the question so many times, and I recently was asked that question on another podcast, and he asked me, and I'm like, yeah, shit, like I don't even know where to begin, because everything evolves around Bitcoin. I mean, I could talk about the podcast, and you probably can also talk about creating content and creating charts in general, and creating all those things and life, and people also talk about like the family and all those things, but like all of my life revolves around Bitcoin, and there's a little bit of family, a little bit of girlfriend, there's a little bit of friends, there's a little bit of trying new things, like learning new languages. I'm trying to learn Hindi for my girlfriend, obviously. But yeah, it's just like a super hard question, and I love that I started that because it makes my guests think so, and I liked it.
I think we actually very briefly had a discussion about it in Vegas, where I said that I felt unconsciously competent talking about Bitcoin, in that if you ask me something, I mean, I've been traveling a lot the past few days. I've not looked at any of these charts or the price action or anything, but I feel like I can just kind of, off the top of my head, kind of generally know what I'm talking about. But then you ask something like that. So I would say since the last time I was on, I have actually gotten engaged to my now fiance. So I've learned how bloody expensive and difficult it is to plan a wedding.
Yeah, I can imagine it's pretty expensive. Like I was at a wedding recently from a friend of mine. It was a super small wedding, like just like 20, 25 people. And he told me what it cost. And I'm like, wait, okay, it costs that much for like 25 people. How freaking expensive is it if you have like 100 people, 200 people, 500 people there? So yeah, it's something I'm not looking forward to spending on, but maybe something that you remember the rest of your life, and it has something deep and meaningful. Yeah, but yeah, really cool. Thank you so much for sharing that with us. As you know, we have the end routine now, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the question is, what is the biggest change that Bitcoin will bring outside of money? So what are kind of the secondary effects to Bitcoin that people might not think about?
I think we're already kind of seeing a certain level of censorship on the internet. I mean, I'm from the UK, so we're already seeing I have to upload pictures of my ID and everything just to watch certain YouTube videos or listen to music on Spotify. So I think at some point people are going to not just look at Bitcoin as a speculative asset, but when they actually understand the freedom and potential of censorship resistant money, that's going to be truly explosive in terms of the understanding and appreciation from the general public. When people start having transactions blocked, when people have a social credit score and suddenly now they can't go on holiday or buy a certain thing because their credit was too low or they weren't a good citizen, suddenly then Bitcoin's popularity is going to go absolutely exponential when people realize that there is this censorship resistant money that's been around for potentially decades at this point, that anyone can buy and use, and there's no discrimination. You can send anywhere in the world practically instantly and free. At that point, Bitcoin really does win.
I love that. And it is something, if it's so second nature that everyone just uses it, then we really have won. And I said that on my podcast. That's the reason why my podcast is not called, I don't know, the Bitcoin podcast or anything like that with Bitcoin, because I know Bitcoin will be boring, and I know I want to do podcasting all my life. I'm 26 years now. If I get to live to 90 years old, I will still podcast with 90 years old. And I know probably it will be super boring to talk about Bitcoin when I'm 90 years old. I probably talk about something different in those days. But maybe I'm the Peter Schiff of Bitcoin, and I'm just keep talking about it. But yeah, thank you so much, Matt, for being on, and thank you so much. Before I let you go, where can people find you and ask you questions and reach out to you, and also find Bitcoin Magazine Pro?
Yeah, so if you just search Bitcoin Magazine Pro, you'll obviously get to our website. And then on social media, on Twitter, we're just Bitcoin Mag Pro, at Bitcoin Mag Pro, or the YouTube channel, again, Bitcoin Magazine Pro. But if you just go to Bitcoin Magazine, BTC Inc., Bitcoin conferences, Bitcoin for corporations, anything like that, hopefully you'll eventually trickle down some of our stuff.
Really cool. Thank you so much, Matt, for being on. Also, oh gosh. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.